We're still focusing on the road ahead for the Nigerian economy, for the government that will run this economy from May the 29th. I've been talking to Bismarck Rewane, CEO of financial derivatives company. We've also been talking to Charles Robertson, global chief economist at Renaissance Capital. And of course, joining us from Washington, D.C. via telephone is Chika Mordi, chief executive officer of the Nigeria Competitiveness Council of Nigeria. Bismarck, let's start with you. Let's talk specifics now. You mentioned debt levels, you mentioned borrowing. Yeah. Nigeria recently requested $2 billion from the African Development Bank and the World Bank, but the finance minister says that's targeted at stabilizing the naira. Is that a good place to start?
No, I think the whole concept of borrowing has to be established, that you can borrow, but the use of the proceeds is important. And I said the discipline that comes by being a debtor or a potential debtor helps also to stabilize the economy. And so the phobia for borrowing, because borrowing proceeds were misused in the past, has to be overcome. Then secondly is that the truth is that you have to establish what the gap is, which I said earlier. You also have to put the facts on the table for the Nigerian people, because there's a crisis of false expectation. Like Charles Robertson will tell you, there's a difference between being oil rich and oil poor. Nigeria is oil poor and not oil rich. Therefore, you have to overcome the expectations and deal with the mental adjustment, which is more difficult than the fiscal adjustment. When you deal with that, then you now come up with the policies, which include the subsidy issues. And subsidies not just in petroleum, subsidies across the board, including the exchange rate subsidy. When you deal with that and you put things in equilibrium, you find that structurally you actually remove the motivation and incentives to have corruption. Some of this corruption is driven out of the structural imbalances and the weaknesses that exist in the system.
Okay, well, hold your thoughts for us. Charles, let me bring you in here. Let's talk about the naira now. There's, of course, there's been talk that we could see a further devaluation after the elections. Give us what you think could be the likely post-election scenario for the naira. We hear that the monetary authorities are tied at the moment. They can't take perhaps cannot take a decisive step as regards the naira. But what do you think will be the level for the naira as we go beyond the elections?
The most recent research report we put out suggested 220 for the currency, but there's an awful lot of debate there that it could be a bit weaker still. So anything out to 240, 250 wouldn't be a big surprise, I guess. We're looking for 220, supported by some interest rate hikes to cap inflation and to prevent inflation becoming problematic. So that's our base case, but we're watching this carefully. We get 30-day moving average data on foreign exchange reserves of the central bank. Now, it doesn't tell us exactly what the figure is right now. So it's possible that there will need to be a little bit pressure on that weaker side than the 220 we're talking about. And of course, it all depends on oil. And very few people are good at forecasting the oil price. If it's $80 later this year, the currency could be strengthening back through 200 quite easily, back into the 190s or even stronger. So a lot of it depends on the oil price as well.
Okay, Chika, let's hear your thoughts on the volatility in the naira, where we could see it settling and how that could affect the competitiveness of the country, talking about exports.
Well, I've always made it clear that I'm an advocate for a weak naira. I don't advocate a strong naira. And it's unfortunate that in the economic policy of both candidates, we're seeing a strong naira position. I think that's very misguided. If we want to encourage export and domestic production that can replace imported goods, then a weak naira is not a bad thing. It's how do you deal with the inflationary impact? And I think the priorities of the government should be very clear as well. We've lost almost $30 billion in trying to defend the currency that supports basically in buying private jets and maintaining them and sending your kids to schools overseas and buying luxury cars, and that doesn't affect the man on the street. So we put the same amount of money in building the productive capacity of the economy, like transportation infrastructure and other things. That would have had a much better effect. So for me, there's a philosophical problem with the priorities. Getting an hour week is not a problem. Allow the market to merge, let it get to some natural level that makes it more convertible, and then focus on how you can create fiscal space and increase productive capacity.
Yeah. Bismarck, let me come back to you here. So we had General Buhari saying if he would get the naira to parity with the dollar. when I saw that, I thought, wow,
I think it must have been misquoted.
Was it?
No,
Did you think it was misquoted?
It must have been misquoted. How can you? How on earth?
And he said that he allegedly said that will happen in the next 4 years. In the first
4 years? No, even in 100 years, it's not going to happen.
Okay, what?
So, come on, please.
That's number one. Number two, the point I wanted to make around that, and it's related to what Chika was saying. And I had an interview last year with the U.S. Secretary of the Treasury, yes. And one of the questions I asked him, I mean, the questions then around that time was that the dollar was getting too strong, and yes. The question was, how do you view this stronger dollar against making American exporters competitive, etc.? And he said the U.S. has always pursued a strong dollar policy. What kind of currency policy should the new government coming in pursue?
I think what we should be pursuing is an equilibrium currency policy, in the sense that it's not the rate of exchange. It is the mechanism that produces the rate of exchange. What we've done is to move from our retail Dutch auction to an interbank system. If you allow the interbank system work, where you clear the market and you don't deplete your reserves to defend it, then a rate will emerge. The rate that Charles Robertson was talking about of 220, 225 is about fair value right now based on the fundamentals. It could go all the way to 250, and there's nothing wrong with that. And then if oil prices begin to increase and things become stable, then you begin to come back. But the thing is that the more expensive the currency, the lower the demand for it. And therefore, you see the rate of reserve depletion begins to reduce. And technically speaking, you begin to get back towards equilibrium. And people begin to substitute and change their behavior, their consumption patterns in favor of the cheaper goods. But also, the exchange rate is a strategic tool for encouraging exports and also dealing with other issues in the economy. So you must understand it. And I see a lack of understanding of currency economics in both parties, which is unfortunate. But the reality is that once, after the election, everybody has to deal with it. You cannot spend money that you don't have.
Right.
If you don't have the dollars, you're not going to spend it. And you have to deal with it. If you like, you can call the currency 1-to-1. You can call it, in fact, 50 kobo to $1 if you want to do that. But it's not going to happen. Within an hour, the currency will collapse.
It will go back to its equilibrium level. But what should be the right policy to pursue post?
No, you should allow the interbank system, which the central bank has to
continue with the current system and reforms.
And then allow the market determine that rate. The euro is in a 12-year low. It was $142 to 1 euro. It's now 105, now 110.
Yeah.
The world hasn't come to an end. The Swiss currency made a 30% jump the other day. So there's the obsession with an exchange rate, to me, is a misguided economic thought.
Okay, Chika, let me bring you in here. Now, the federal government in the last few years, and we've seen a larger push in the last 2 years to strengthen Nigeria's export market. Now, I suppose there's some areas, some items that we export that have comparative advantage. In going forward, which of these products, which of these items, either within the agriculture sector or non-agricultural products, do we have comparative advantage? Can we pay more attention to strengthen them, strengthen local manufacturers, and make this economy more competitive?
There are a lot of options. I think, let me just make one point clear. If you look at the economy itself, it's been reasonably diversified over the last decade. So if you look at the contribution of all, and this is not just about rebasing, it has come down in terms of economic output. Obviously not in foreign exchange or government revenue, but it's been diversified in that sense. Now, there's still some low-hanging fruit. Agriculture is one. If you look at agriculture, if all you do is to cut down the amount of goods that perish, which is about 70% today, and you take that down to half, you basically double the agricultural output. That will have an impact immediately in food importation and food exportation as well, which affects foreign exchange. The second thing is even the petroleum sector, and I think Bismarck alluded to this, there's a down for structural reform, which is why one of my regrets about this campaign, we didn't hear questions put forward about the PIB and restructuring the petroleum industry. That is long overdue and would have an effect not just in reducing corruption, that is a big word to face, but would also improve the ability of non-direct, in other words, processed petroleum products, where we can have a comparative advantage immediately. Now, in a more general sense, and this is for me is more philosophy than anything else, there are a lot of Nigerian businesses, a lot of Nigerian entrepreneurs that are competitive. If only their cost of production can be brought down, and I'm not talking about production because of the cost of particular common inputs, but I'm saying those things that are peculiar to the country in being very expensive can be dramatically brought down and you will see very great efficiencies, and they'll be more competitive. I mean, power, transportation, red tape, bureaucracy, and even the cost of doing business can be reduced in a way that will make them more competitive.
All right, Charles, let me bring you in here. Going forward from May the 29th, let's talk more. Okay, we appear to have lost Charles at this moment. Well, let's stay with you, Bismarck. Income inequality, that's something that's also been a hot topic of debate. How going forward we can reduce that rich-poor gap that we have in the country.
I want to put a spanner in the works. Should that be a focus even at this stage? Or should the country simply be focusing on creating jobs?
I think the distribution of income will be a secondary issue. The issue is about growing the economy and creating opportunities, right? Then distribution of income will come by tax policies and how you actually spend the government expenditure on health, on education, and all of that will help to distribute income, increase discretionary income rather than just income. More than anything else, once there's corruption is addressed, the level of income inequality automatically would actually address itself.
All right, hold that thought for us, Bismarck. That was Charles Robertson, Chief Global Economist at Renaissance Capital. We've also been speaking to Bismarck Rewane, CEO of Financial Derivatives, and of course Chika, Mordi, CEO of the NCCN, looking at the road ahead for Nigeria's economy. Welcome back to our special coverage of Nigeria's 2015 general elections. Now, in the past year, as Nigeria's economy has slowed and corruption rumors boiled, whoever wins will have to dig Nigeria out of a financial slump, face Boko Haram and sliding oil prices. So it's now about time to be president of Nigeria, where Charles Robertson, Chief Global Economist at Renaissance Capital, joins us. We'll also have in the studio Bismarck Rewane. He's the CEO of Financial Derivatives. Joining us via telephone from Washington, D.C. also is Chika Mordi. He's the CEO of Nigeria Competitiveness Council of Nigeria. Thank you so much, gentlemen, for taking the time out to join us. Bismarck, let's start with you. You're in the studio. Yeah. Now, we've seen a lot of fiscal headwinds this year, and it's been said now that the government that runs this economy from May the 29th will have to hit the ground running. Yes. We're faced with lower oil prices, lower government revenues, security issues, and a host of other issues. Where would be, or for you, let's talk about the most urgent issues you would like this government to begin to address as soon as they continue to run the economy from May 29th.
First of all, the correct assessment of the situation to establish what the real gap is. Because it is said over the last 20 years that corruption takes about maybe 20 to 25% of revenues, another part of it wastage. So basically, Nigeria's economy has been running 50% of capacity. Now, if the economy was able to run at 50% capacity and deliver these results, it means that if revenues are down 50%, then you are where you were, if you can cut off the waste and the corruption. But the important thing is to establish what the exact gap is and to build on the foundations that have been laid. Most of the things that have been done in the last 4 or 5 years are foundational, and therefore you can build on that and take it and run away. You have to manage the crisis of false expectations because people are expecting a lot in a declining revenue situation. But if you look at historically, Nigerian politicians and policymakers have always done well under pressure rather than when there was a buoyancy of oil prices. So I think it's not as difficult. We've been at this cycle before and it's cyclical, and I think we'll probably get out of it.
Okay, well, Charles, let me ask you that same question. As we have a government run this economy from May 29th, what areas would you like that government to focus on?
Well, I know what investors are looking for. They're looking for post-election, a peaceful election. They're looking for a budget that reflects the oil price realities. And that might mean an increase in VAT, for example, from 5 to 10%. It might mean a change in the fuel subsidy or its removal entirely. Investors are also looking for a currency which they feel is at a sustainable level. So right now, you've got a currency of 200 to the dollar. Most investors that we speak to think it's going to be 220 or even weaker in the next few months. So those are at least the three things that investors are looking for today.
Yeah. Charles, it's Godfrey here. I want to turn this around and say maybe this is actually the perfect time for anyone to be becoming president of Nigeria, because what you'd be taking over is an economy whose challenges have been well documented. I mean, when you read, when you listen to all the people who speak about what Nigeria represents and the size of the opportunity here, it sounds like it's an easy fix. Fix corruption, widen the tax base, diversify the economy, and this economy could be growing at more than 10%.
Absolutely. There's no question about that. Potential GDP in Nigeria is growing at about 11%,
Okay.
right? And real GDP is at about 5%. So basically, you don't have to do that much. Just all you have to do is remove the constraints. And what Charles was talking about, having an equilibrium-driven exchange rate, expanding the tax base, and then more than anything else, blocking those leakages. If you did that, then basically investors will have confidence, and a lot of money is going to come into this place. This country will be both domestically and internationally competitive.
Yeah, including the money that left before the elections, the lead up to the elections. Charles, did you pick up those points from Bismarck? But I also wanted you to pick up on this idea in my head that this is perfect for anyone to be president of Nigeria, at least.
Well, I'm a big fan of Bismarck, so I always agree with what Bismarck's saying. And I'd like to only add, I also think it's amazing that we don't know who's going to be the president of Nigeria after this election. And I think that's remarkable. We have such uncertainty in the UK as well. And I think it's a testament to how far Nigeria's progressed in the last 15, 20 years that we have this uncertainty. Can Nigeria grow at 10% a year? Undoubtedly. I mean, when we wrote the fastest billion a couple of years ago, we were saying that we think that sort of growth rate is what comes in the 2020s, that the 2010s is about consolidation of the very strong growth we've seen already. And it means delivering on the infrastructure. It means getting electricity supply up, sorting out the roads, sorting out the railways, sorting out the ports. And I think that has to be a key priority, infrastructure, electricity, and transport for the next government.
Yeah. Charles, you're an economist. I want to put you in a difficult spot here. I want to ask you who you think between the two men would best be able to turn things around and implement the ideas that you are talking about.
Yeah, you really want me to get me into trouble now. Well, the difficulty, honestly, the difficulty I have with this is, and what I find very interesting about the Nigerian election campaign, is that there's been very little focus on the fine details of economic policy. If you look at a country which is very wealthy, like the UK, the election details can be quite boring and detailed, and about whether such and such a tax rate is going to go up 1 or 2 percentage points or not. That has not been the focus in the Nigerian election campaign. So it's hard for an economist like myself to look at the two candidates, the two main candidates, and try and distinguish how policy is going to be different. I'm afraid it's not a call I can actually tell you.
Bismarck, is ducking the question. You can do it.
No, I don't think. I think, as a matter of fact, the more illiterate you are about economics, the easier it is for you to implement these policies. The economic problems are well documented, as you said. The hole is there. Just dealing with leakages and injections is going to deal with this thing. And I don't think there will be much difference between any of the candidates. It's just a question of the determination and the efficiency in which to implement and execute. The policies of both parties, if you look at them, are essentially the same.
Okay, well, Bismarck, hold that thought for us. Let's bring in Chika Mordi here. Now, Chika, one debate that continues to be ongoing is diversification of Nigeria's economy. Of course, we've seen weakness in the global economy, and there's been talk about Nigeria looking inwards, boosting domestic consumption, and just basically, as the Minister of Industry, Trade and Investment always says, patronizing made in Nigeria goods. Now, for the government that will run this economy from May 29, what areas or what kind of policies can we see that will make Nigeria, the Nigerian economy, more competitive?
I think it's a very complex bouquet of politics, complex but very common sense driven. And I can't help but dive into some of the comments I had earlier on, about whoever takes over and how they can govern, and perhaps who's better poised to govern. I think the reality is that governance is a very different prospect from when you're campaigning. So when it comes to governance, people get more pragmatic, and a lot of the campaign promises look very different. And to that extent, I agree with Bismarck that there's not going to be much that will separate both candidates come May 29th, whoever goes in there. To answer your question, the productive capacity of the economy is a critical thing. It's no point trying to substitute important items if you don't have the capacity to produce them domestically. Absolutely. It's also no point looking inwards to the domestic market if the purchasing power of that market is very low, which is the position today. And the big challenge is to have inclusive growth that goes on side by side with increasing that local demand. And the policies I would like to see, personally, would be to see reduced involvement of the government, reduced citizen, some creation of fiscal space. Some of the promises we're hearing are, quite frankly, very negative, because they would involve social programs that would involve increasing government expenditure, which they don't have this fiscal space to effect. So the less the government involvement, the lower the cost of doing business, the less the amount of red tape and bureaucracy, the easier it is for entrepreneurs to flourish. And I think that is sort of the direction the government should be, whoever is there should pursue it after May 29.
Okay, now, Bismarck, a very good point that Chika has made, less involvement by the government. Let me take your mind back to about 2 weeks ago when President Jonathan was at the Nigerian Stock Exchange. That was one point he actually hampered on, that going forward, the government will be less involved and allow the private sector to run the economy. Are you confident that we're going to see this going forward? Or, I mean, is the government in a position where they simply have no choice but to allow the private sector to be in the forefront? There's
a difference between good to have and need to have. Okay, that's good to have, right? What they need to have on this economy today is that Nigeria also has a debt problem. When you look at debt to GDP ratios, it looks low. But debt to export ratios is going as much as 23, 24%. External debt is now up to about $26 billion. The decision now is that to fund this deficit, to come out of an economic slowdown, you need to decide that you have to borrow, and you have to borrow efficiently.
Right.
Both parties are very anti-borrowing, from what I can see. Nobody said that we have to go to international markets to raise money, because the profile of a borrower and the covenants and the conditions precedent are very, very stringent. And that will bring another level of discipline to the Nigerian government. You have to borrow and spend your way out of a recession. You cannot save your way out of a recession. So I think there's a fundamental issue that, one, we have to improve our credit worthiness, we have to improve the discipline in which we work, and we have to have very clear that gap, when it's established, you now decide how you are going to fund the gap. And that is what we have to do.
One analysis I've seen out of the investment United, and actually it's from South Africa, RMB, they were making the point that they think from a Jonathan perspective, what you're getting if you get Jonathan back is continuity, which is good for business. On the other hand, if you get in General Buhari, his focus is going to be fighting corruption, sorting out security, and also some kind of redistributive agenda, socialist agenda, so to speak. What's been your reading of the manifestos of the two parties?
Well, I think that's how you're going to deploy resources.
Yeah.
Continuity, yes, you need it. And I don't think there can be any change. That's why I say both parties are going to have to pursue the same agenda. It is blocking of leakages, making sure that you have, you utilize the resources much more efficiently. That is going to be the difference. So is one going to be more efficient than the other, or is the other one going to be more distributive?
Yeah.
I think that's the key issue here.
Yeah.
Okay, Charles.
Are you able to see it? It's not clear.
Yes, I think that. What
are you saying? It's clear who's going to be more redistributive, so to speak?
I think that an APC government will try to be more redistributive, right. But you can only distribute that which is available.
Yeah.
They will find out, if they get there, that the hole is much deeper than you think.
Absolutely.
And therefore, there will not that much. There's work to be distributed rather than resources to be distributed.
Charles, is Buhari a socialist?
I haven't seen enough of the details of his policies to be sure. And also, it's one thing what people say ahead of elections and what people are able to do is, at the point Bismarck's making, can be very different. What I think is quite important for Nigeria is that the last few years the country did not build up extra debt in the way that Ghana did. When commodity prices were high and times felt good, Ghana went out and borrowed a huge amount, ran budget deficits of 10% of GDP or more, and built up a large level of debt, which is now causing them acute problems. Nigeria has got a lot of difficulties to face too, with the oil price lower, but at least, although the debt metrics that Bismarck talked about is right, at least the overall burden is not anything like as bad as some other countries, which is helpful.
Okay, Charles, hold that thought for us. We'll just take a break at this moment. We'll be looking at the road ahead for the Nigerian economy, and of course, for the government that will run this economy from May the 29th. We've been talking to Bismarck Rewane, CEO of financial derivatives company. We've also been talking to Charles Robertson, global chief economist at Rencap. And of course, joining us from Washington, D.C. has been Chika, Mordi, CEO of the Nigeria Competitiveness Council of Nigeria. We've got more for you